For as long as Bitcoin is below around 51 to 52,000, we can't flip too bullish just yet because of course that would be getting ahead of ourselves. Because once again, if we do not break it sometime soon within the next 1 month approximately, then we could be in for quite a bit of downside price action over the next few weeks once again. So as of right now with my Bitcoin strategy, currently I'm actually not going too heavy in Bitcoin. But yeah, considering the fact that we have already seen this huge bullish movement to the upside, I'm just personally laying off a little bit with Bitcoin purchases, but just in the short term, talking about potentially the next few weeks, maybe in the next 1 month approximately. Of course, it's very hard to say how long corrections might last for, but in that sort of approximate time frame, once again, this is showing us that we are likely to see some sort of short-term correction sometime soon. But yeah, right now, this fear and greed index is basically just giving us a greed signal, which is not an extreme greed signal. So, you know, we could be in a worse situation, but right now, having a greed signal here still says that we're due for some sort of bearish price action sometime soon. And if we do see a break to the downside here, a confirmed break of the support once again, then the technical price target in that case is simply the bottom of the wedge, and that's currently coming in at around 46.8k, give or take. But right now, the fact that we are currently sitting in extreme greed, this should honestly be sending alarm bells, and we are in fact due for some sort of bearish price action sometime soon. Because once again, anytime we're seeing extreme on this indicator, that means the market is potentially about to turn around, at least in the short term. Welcome back to the crypto world. My name is Josh, and as you can see, we've finally seen all of that bearish price action over the past 24 hours that we were looking for really over the past 1 to 2 weeks. This is the shakeout that we really need in order to head to much higher prices later on. But of course, considering that this only just happened, we might not be out of the woods just yet. So in just a moment in this video, I will be going over some different Bitcoin price targets and my Bitcoin strategy moving forward after the crash. Later in the video, I will be covering topics such as potentially Wyckoff Distribution. I will be going over the Bitcoin funding rates, which have changed drastically over the past 24 hours. Also, the Bitcoin Fear and Greed Index, Bitcoin liquidations, all of that and more in this video. So definitely make sure you're watching all the way to the end so that you're not missing out on any of this important information. And if that sounds good to you, just before we jump into it, be sure to leave a like on the video down below. And if you're new to the channel, you might as well subscribe with notifications turned on so that you're not missing out on any of these future videos. But anyway, with all of that out of the way, let's get straight to what this video is about. So first of all, for quite some time now, really over the past 1 to 2 weeks, I've been really wanting to go extremely bullish on Bitcoin, but I simply just couldn't flip extremely bullish on Bitcoin while we were below the golden pocket. As you can see here, bringing out the Fibonacci retracement tool from the all-time high down to these lows at around 29,000, we never saw a proper confirmed break above the golden pocket. The top of the golden pocket is sitting at just above 52,000. So what we would have needed to see is really a daily candle close above that level and actually flip it into support, use that as support. And obviously we never actually saw that. So I was constantly letting you guys know on the channel throughout this entire time period just here, while we are below the golden pocket, we need to still consider the fact that we can actually see a bearish scenario play out here. And considering other factors such as the funding rates and the fear and greed index, in fact, a bearish scenario was probably more likely than a bullish scenario. But with that being said, I'm not going to pretend that I actually predicted this exact crash. In fact, so far, I haven't actually seen anyone on the internet predict exactly this crash that we've seen over the past 24 hours, because obviously Bitcoin actually dumped roughly around $10,000 in the span of about an hour. And so if you've seen another YouTube video or something like that out there that actually predicted this exact crash, please let me know in the comment section down below and I will give that video a shout out, because so far I haven't actually seen a prediction that predicted this exact crash. And obviously for this rising wedge pattern that I was talking about over the last 2 days here on the channel, the price target has been well and truly met. So for example, if you entered a small short position just here as we we're breaking down, obviously that would have been a very profitable trade. But yeah, the technical price target was coming in at the bottom of the wedge. As always with a rising wedge pattern, the technical price target is meant to be the bottom of the wedge, coming in at around 46.8k, just below 47,000. And of course, once again, we got to that price target, but we kept on going all the way down towards around 42,000. But what's interesting is we immediately bounced back up, and for a few hours, we did actually consolidate around that sort of price target at around 46 to 47,000 once again. But obviously since then, we have dipped a little bit further to the downside. So where are we going now? What's going to happen next? Well, first of all, I'll start off by saying that crashes like this are actually normal in crypto, believe it or not. In fact, some might not even consider this as a crash. This could just be a small dip to the downside in the eyes of some crypto investors out there, because for example, zooming out on the daily time frame, a lot of you might remember the crash that we had during May. That was actually around a 50% crash that we saw over about 1 week. And so far, this crash from the top to the bottom has only been around 19% 15% to the downside. So obviously it's a significant drop, but nothing that Bitcoin hasn't seen before. And I'll also say that crashes like this do not recover extremely quickly. So if you're expecting a huge pump to the upside tomorrow, honestly, that is extremely unlikely. What is much more likely is simply a sideways range around where we are right now. And obviously these sideways ranges can become volatile. So even though they look like a sideways range, if you're zooming right into like the 1 hour chart, they do actually look like some pretty big swings. And as for more downside price action, that is not out of the picture just yet. We can, technically speaking, still drop a little bit lower. So my Bitcoin strategy right now, I have finally begun dollar cost averaging back into Bitcoin. Of course, I'll let you guys know back around here roughly that I was actually stopping my Bitcoin purchases because we're getting ready for some bearish price action coming soon. But yeah, now I am actually accumulating Bitcoin again, but I am not going very heavy into Bitcoin. I'm just resuming my regular dollar cost averaging back into Bitcoin, and I'll only go a lot more heavier into Bitcoin with huge Bitcoin purchases if we drop even lower. And that's only because of the fact that I did actually accumulate a lot of Bitcoin down towards 30,000. And so right now, considering the huge bullish movement that we've had over the past 1 to 2 months just here, it just wouldn't make too much sense from my position at least to go extremely heavy into Bitcoin right now. But once again, right now I am actually dollar cost averaging back into Bitcoin, just not extremely heavy. Because also bringing out the 50-day EMA and the 21-week simple moving average. These are moving averages that I've discussed time and time again here on the channel. I actually discussed these yesterday. And for the longer term subscribers out there, I was discussing these moving averages a lot during this time period just back here. Because of course, when we were in this first stage of the bull market, the 50-day EMA was huge support for Bitcoin. And it was only when we started breaking back below the 50-day EMA, that's when things started to get much more bearish. So right now, the small crash that we've actually seen just here, at least in comparison to that bigger one during May, once again, this smaller crash, it did actually see one quick dip below the 50-day EMA, but right now we have no daily candle closes below the 50-day EMA just yet. And right now, the 50-day EMA, which is the yellow line just here, is coming in at roughly around 45,000 US dollars, just above 45K. So if the daily candle closes can remain above 45,000, then that would be great to see, obviously, because that would mean that we've only just seen a retest of these moving averages before heading higher. But obviously, if we start seeing a daily candle close below the 50-day EMA, then I will be completely focusing on the 21-week moving average just here. That's what this green line is just here. As you can see, it's coming in at roughly around 42,500 US dollars. And what's amazing about this exact moving average is, as you can see, this crash actually got almost an absolutely perfect bounce along this exact moving average. And once again, this moving average is nothing new to the longer term subscribers out there. I've been talking about this moving average for quite some time now. So if the Bitcoin price can remain above this one in particular, this 20-week moving average, that is how you know that things are still looking really good on the bigger picture here on the daily time frame. But if we really start breaking back below the 21-week moving average, and by the way, we need to see a weekly candle close below the 21-week moving average to confirm a break below it, because of course it is a weekly moving average. So don't just think a 5-minute candle is going to confirm a break below that. But yeah, anyway, as I was saying, if we do get a confirmed break below the 21-week moving average, then that is when I will flip much more bearish on the Bitcoin price, because taking a look at previous times that that's happened, as you can see back here during around the middle of May, the moment that we started breaking back below the 21-week moving average, we actually continued that crash to the downside by quite a lot. And we actually entered into much more of a bearish time period in the market over the next 2 to 3 months before we finally saw some more bullish price action. And we've seen this time and time again throughout Bitcoin's history. As you can see, back in 2019, the end of 2019, as you can see, we dipped below the 21-week moving average. And the moment we did that, we had a crash to the downside, and then we actually used that moving average as major resistance with that small pump to the upside at the end of October in 2019, as you can see, and we actually stayed in that more bearish time in the market for around 3 months before we finally saw more bullish price action later on. And same back here as well, during March 2020, we broke back below it, and as soon as we broke below it, that confirmed a major correction coming next. Now, keep in mind that that crash during March 2020, that was when the pandemic hit and the stock market was capitulating, so that was a different time in the market compared to right now. So it would actually be unlikely for us to see a capitulation of that scale, because by the way, we actually crashed around 50% in a single day during March 2020. And believe it or not, even if we crashed 50% in a single day, we still recovered after that crash. Bitcoin has honestly seen so many crashes worse than what we've just seen, and we've still recovered time and time again throughout Bitcoin's entire price history. So I understand that a lot of newer investors that might have jumped in over the last few weeks here might be feeling very afraid at the current prices, because this might be the first crash for a lot of newer investors into the market. But for those of you that have been here for even since around May this year, as you can see, we experienced that huge crash in the market and we still saw a lot of bullish price action that came out of that crash. So when you're looking here on the daily chart, I'm actually once again not expecting an immediate recovery. I would be expecting more of a sideways consolidation in the immediate short term, and more downside price action is not out of the picture just yet. That still remains a possibility for Bitcoin. It's just really important for the newer investors out there to have a long-term outlook, a long-term mindset on Bitcoin, because if you're actually not investing for the longer term, I'm talking years for now, then you're actually a trader, you're a Bitcoin trader. And when you're trading Bitcoin, that becomes much more risky, especially for the beginners out there. And now bringing out the Wyckoff ratio indicator, I let you guys know about this indicator close to around a week ago now, approximately. And I'll let you guys know around a week ago that basically we have been in this red for quite some time. And this is an indicator that tells us that we are due for a correction sometime soon. But the bearish price action, the bearish correction is only confirmed if this red line drops below this orange line just here. And as you can see, that's exactly what we've seen just now. So this has now essentially confirmed the Bitcoin correction. And you might be wondering, well, this is a little bit late. We've already seen the downside price action, but keep in mind, a correction is more than just a single dump. For example, looking at some previous times throughout Bitcoin's history where this indicator has given us a warning signal of a correction coming soon, there's a few very small red signals all the way back here during around November and December 2020. But as you can see, considering that they were only very small, we never really saw any major correction out of those. The biggest bearish price action that we saw out of those ones back during November 2020 was just a 17% dump to the downside, as you can see, followed by sideways consolidation. But now focusing on the much bigger red signals just here, as you can see, because if you're actually comparing them to the one that we actually saw just here over the past 1 month or so, this indicator actually gave us a bigger signal than we've seen this entire year so far. So yeah, once again, looking at these bigger signals that we saw earlier this year during the very beginning of this year, January this year, as you can see, this Wyckoff ratio was basically saying that we are due for a correction sometime soon. And then the moment that we dip below this orange line here, that is when the correction is confirmed. So zooming in a little bit further to the Bitcoin price when that was happening, obviously, as you can see here, we had an initial dump to the downside that actually confirmed the correction just here. And what came next? We actually saw a little bit more bearish price action in the immediate short term. And then we actually had a decent sized bounce back to the upside. And keep in mind that this is on the daily chart. So each one of these candles is an entire day. So yeah, once again, we actually had around 3 to 4 days of bearish price action. And then we had a decent little bounce to the upside that lasted around 2 days before more bearish price action that lasted for around a week. And then we had another week of sideways consolidation. And then the price began entering into more of a bullish time period. So basically from the top of that correction down to the bottom, that lasted around 2 weeks worth of bearish price action. And from the top of that correction to where we fully recovered and began breaking into new highs, that was pretty much an entire month. Now looking at this next one that we saw in the end of February this year, as you can see, this indicator was also showing us signs that we were due for bearish price action coming very soon. And the moment that we crossed these lines just here, that's when we confirmed this next correction for Bitcoin. And that cross happened on the first day of bearish price action just here, that initial dump to the downside. And the very next day, we actually dumped to the downside a little bit further. And then we entered a bit of a sideways consolidation. And then we had some more gentle bearish price action to the downside towards the end of that week just there. So once again, that downside price action during that correction in February lasted for around a week. But from the top of that correction to where we fully recovered, that was around 3 weeks. Now, this one just here wasn't as bad. This was the one during around the middle of March this year. As you can see, we confirmed the correction with the cross of these lines just here in the Wyckoff indicator. And we had 2 red daily candles just here. And then we actually entered a sideways consolidation for close to around a week. And then we had one last dip to the downside that lasted around 4 days or so before we bottomed out for that correction. So looking from top to bottom, that correction lasted for nearly 2 weeks as well. And looking from the top to where we pretty much fully recovered was around 3 weeks, as you can see. And then the next correction that came next, as you can see, this Wyckoff indicator was telling us that we are due for a correction sometime soon. And then the moment that we crossed these lines just here, that was when the correction was confirmed. And that correction from top to bottom lasted around 1.5 weeks before we saw a significant bounce to the upside again for Bitcoin. But keep in mind that we have still to this day not fully recovered that correction up to this high just here, because that high is actually the all-time all-time high for Bitcoin at close to 65,000 US dollars. And obviously you saw what came next in the Bitcoin price during the middle of May. So basically with all of that information in mind, it's actually much more likely that we're going to spend at least 1 or 2 weeks in this more bearish time period, if you want to call it that, before we might recover to the upside. But once again, at least 1 to 2 weeks. So that's more of the minimum time frame. The worst case scenario would be if we broke the 21-week moving average at around 42,000 US dollars. If that is the case, then we could actually see prices as low as the $30,000 price range again. But obviously, let's not get ahead of ourselves because we are still holding above the 21-week moving average at the time of filming this video. And by the way, another thing that I've been pointing out for quite some time is the fact that right here, just recently over the past 1 month approximately, we've actually been almost replicating very similar price action to what we saw during around February and May 2020, all the way back here, but just at a much smaller scale compared to this previous price action during the Bitcoin chart. So if we play out a similar outcome, which is of course a further crash to the downside, it would actually be very unlikely for the crash to be the same scale as that crash, once again, considering the fact that right now the price action is not at the same scale, we're at a smaller scale. Now previously I had this rising wedge pattern here on the daily time frame drawn out like that, but considering the amount of retest that we saw along there before the break to the downside, we could probably adjust this bottom line to actually fit the new pattern. And now when you're taking a look at the pattern like that, once again, you can see a lot of similarities between right now and around the end of April this year when we were initially breaking to the downside. Now, if we're at a smaller scale version to where we were back then, what could we expect for a worst case scenario if we see a similar outcome to what we saw during May? Well, let's first try and figure out the ratio in the difference in scale of these two areas on the chart just here. So let's first measure the December 2020 bullish move just here. As you can see, that was around a 130% pump to the upside. And this bullish movement that we saw during the end of July this year, that was roughly around a 40% pump to the upside. So far that gives us nearly a 3-to-1 ratio. And now looking at this next bullish movement in the Bitcoin price back then, we actually saw nearly a 100% move, around a 90 to 100% move in the Bitcoin price. And now looking at the next bullish movement in the recent price history in comparison to, as you can see here, that bullish movement was around 25% to the upside. So when comparing the 90% pump to the 25% pump, once again, that puts us at around a 3.5 to 1 ratio. And then looking at the next bullish movement that came after that, as you can see, that was around a 40% move last time. And now looking at the corresponding move this time around, that was around a 14% move. And so comparing the 40% move to the 14% move, that gives us a ratio of around 2.9. So basically taking all of that into consideration, we could probably almost just call this a 3-to-1 ratio. So let's just measure out the crash during May this year. In total, from top to bottom, well, let's just say from the all-time high to this bottom just here, that was around a 56% crash in the Bitcoin price. But from this immediate top just here to the bottom, that was around a 52% crash in the Bitcoin price. So whether you're using the total 56% crash to the downside or just the 52% crash to the downside, when you're applying a 3-to-1 ratio to actually fit into the scale that we're at right now, that suggests a downside move of around 18% approximately. And so from top to bottom so far, this move has actually been a 19% move, which is really interesting because once again, I've been discussing the similarities between this price action and this previous price action, but obviously just at a smaller scale. Once again, I've been mentioning that quite a lot here on the channel over the past few weeks. And also something else to pay attention to is we could actually be playing out some Wyckoff distribution. We ended up seeing this play out obviously at that all-time high area on the chart in around 50 to 60,000 US dollars. We saw some strong Wyckoff distribution playing out. And what we've seen recently, once again, is more Wyckoff distribution, which is essentially resembling this distribution schematic. But what we need to now do to actually confirm further downside price action is essentially just break these previous lows just here, as you can see here. And so right here on the chart, that would be around this area just here at around 44,000 US dollars approximately. If we start breaking further to the downside below that, basically if we form a brand new lower low below that wick that we formed at around 42,500 US dollars, then that is how you know that Wyckoff distribution is playing out and we're actually likely to see some further downside price action after that. And how far could we go down if we actually break those important levels just there? Well, sure the technical price target for this rising wedge pattern is still coming in at around 38,000. Well, just below 38,000, as you can see just here. So that would be a very strong support level for the Bitcoin price. And what's very interesting about those levels in particular is bringing out the Fibonacci retracement tool from this low at around 29,000 up to the recent high just here. As you can see, we've got the 38.2% Fibonacci level coming in at almost exactly 44,000 US dollars. And of course, once again, not too long ago, we saw strong support coming in at that exact same price level around 44,000. So straight away, that level is a level to pay attention to. And once again, if we break any lower, then we have the golden pocket, the 61.8% Fibonacci level coming in at around 38,000 US dollars. And obviously, if you've been watching all of my recent videos, it was because of the fact that we could not get above the golden pocket recently. When you're looking at the Fibonacci levels to the upside, that was also one of the main reasons why we saw some more bearish price action coming next. So perhaps if we do end up making it towards 38,000 US dollars and getting a quick bounce along that level, and more importantly, if we do not see a weekly candle close below the 21-week moving average at around 42,500 US dollars, then we could still be looking pretty good here over the next few months or so. Now, taking a quick look at the Bitcoin funding rates across exchanges, as you can see right now, we're actually seeing negative funding rates for pretty much the first time since when we were at around 29,000 US dollars. Seriously, throughout this entire time period just here, pretty much over the past 1 month, which means that most of the time they have been more positive than normal. And so this is actually amazing to see. This is very refreshing to see some low funding rates and even negative funding rates, because this now means that the majority of people are in short positions, and a lot of those over leveraged long positions have obviously been liquidated, as I discussed in my latest Ethereum video. If you checked that one out, once again, I actually went over the exact reasons that actually caused this crash. So if you missed that video, definitely check it out. It was my last video on the channel before this one. And once again, over the last 24 hours, around $3.5 billion worth of long positions have been completely liquidated. And just in Bitcoin over the past 24 hours, we've actually seen nearly $1.5 billion US dollars worth of long positions that were liquidated. So this was essentially a giant shakeout to shake out all of those over leveraged long positions, and also to shake out the weak hands, the new investors that were jumping in at these higher prices. A lot of them would have now probably panic sold their Bitcoin. And while in the immediate short term, that might seem like more of a bearish thing, in the longer term, that is actually a great thing for the Bitcoin price. That is very healthy, because a lot of those people that might have panic sold just here, they will end up FOMOing in at higher prices later on as we enter the next inevitable pump. There's always going to be corrections, and there's always going to be pumps back to the upside. And the longer that you're in crypto, the more you'll come to know this. And also, what's great to see along the lines of that shakeout, once again, is the fact that the fear in greed index is finally out of that greed range. For quite some time, pretty much the last month, as you can see, we were in the greed signal. And just yesterday, as I was letting you guys know as a warning, we were in extreme greed, which is actually a strong signal that we are due for some bearish price action really soon. And so, of course, we have now seen that bearish price action, and right now we are in the neutral zone, which is amazing to see. Now, obviously, we have more room to the downside. We are not in the fear zone just yet, so keep that in mind. If we do head further down in the Bitcoin price, and this indicator gets further into the fear zone and even towards extreme fear, that is the best buying signal that you could possibly get. Because of course, that's exactly what we saw on this channel. If you were on the channel around 2 months ago, that's exactly what we saw, down towards 30,000 US dollars per Bitcoin. The Bitcoin fear and greed index was sitting in extreme fear at that stage, once again at around 30,000 US dollars. And I was letting you guys know constantly on the channel back then in around June and July that I am buying a lot of Bitcoin. I'm going so heavy into Bitcoin. So if we do end up seeing that again, which might not happen straight away, it might happen, in a few weeks from now. But if we do see that again, then as a part of my strategy, I will be going a lot more heavier into Bitcoin. And now taking a quick look at Bitcoin's historical monthly returns, as you can see here, this little chart just shows us the gain or the loss that Bitcoin had during all of these individual months ever since 2013. And as you can see here, the single most bearish month in Bitcoin's entire price history is September. As far as this data goes, once again, since 2013, we are starting the 9th September and we're already sitting in the red. And out of these 9 Septembers that we've seen since 2013, 7 out of 9 have been bearish months. Only 2 out of those 9 were actually bullish. So keep that in mind as well. We could be in for some more bearish price action for almost this entire month, but you should be thinking of that as a massive opportunity to get into crypto, because obviously the ones that get in at the lower prices are the biggest gainers when the bullish price action comes next. And if you're looking in October and November, historically speaking, they are some of the most bullish months in Bitcoin's entire price history, at least since 2013 once again. And also, if you guys want real-time updates on the crypto markets, definitely check out my Twitter. The link to my Twitter is in the description down below. But anyway, that's just about everything I have to say for this video. I really hope you enjoyed the video, and if you did, be sure to leave a like down below. And if you're new to the channel, don't forget to subscribe with notifications turned on so that you're not missing out on any of these future videos. And considering the fact that right now we are entering into an amazing opportunity in the crypto markets, believe it or not, there's actually never been a better time to stay active in these markets, and there's never been a better time to share these videos around with your friends if you want to get your friends involved in this amazing opportunity. And as always, I really do appreciate all of your support on the channel at the moment. I can't thank you guys enough. But anyway, that's really everything I have to say for this video. Once again, I really hope you enjoyed it, and I'll see you all in the next video.